Hello and good morning, everyone. Welcome to yet another episode of the Market Snapshot series. My name is Rufus Kamau, market analyst at FX Pesa. So, apologies. On Monday, we had a public holiday, so I couldn't be able to host the session. We had to take a short break, but either way, we are back, and I know a lot has happened since we talked on the prior session last week on Thursday. We have had really good swings happening on gold. Good is relative. It may have been good to one trader and bad to another, depends on the direction of your trades. So as usual, remember this session is not is not investment advice. It's not a recommendation to trade. So always do your own due diligence and practice proper risk management. So it has been quite a good number of heavy weeks, mostly influenced by US politics, mainly as a result of Trump announcements, especially tariffs on China, the accelerations in tariff negotiations. There's also the issue of oil. We know what has been happening with major companies in Russia that are involved in production and distribution of oil. They have been taking hits across Europe as well as in Ukraine, as well as in Russia. And this is having an impact on oil prices. So you may have not noticed a very strong bull market happening in both US oil as well as Brent oil. So at the same time, today we enter the 23rd day of the US government shutdown. And that means that the statistics bureaus in the US, these are the bureaus that provide data on different parts of the US economy. These includes the GDP reports, the non-farm payroll reports, the CPI reports. So all of these reports will not be present until the US government ends the shutdown. So far, it's the second longest shutdown in US history. And of course, the markets are reacting to this. So we'll be diving into this and more as we try to understand what's happening in the market. So once we cover these, we'll also be doing something else. We'll be doing technical analysis, trying to understand what's the direction of the dollar, how are the major pairs behaving. We'll be looking at the equities markets with a focus on indices. And lastly, we'll look at commodities markets with a focus on gold, silver, and oil. So if you can hear me clearly and you're enjoying this session, make sure to hit like and subscribe. If you're watching on X, make sure to share. And at the same time, I have a question for you guys. So far, are you mostly focusing on technical analysis, fundamental analysis, or are you majorly focused on Trump updates, which have been the biggest mover in the markets since the year started? If you have an answer for me, just drop it in the comment section as we progress. Amazing. So let's begin by checking how currencies have been performing since the day started. You can see we already have a response from Nelson and Diego. Good morning. I'm trading on the news. I understand. Yes, Trump has been a big mover. So any major update he makes, especially concerning the US-China trade war and the progress of Congress on the current deadlock in negotiating a budget, is also a big mover. You can see was 116.1. Mind looking at USD card all the way from Nyeri. Thank you, and thank you for joining the session. Gold and silver has been collecting in this. Is this a profit taking for institution? Good question. Good morning, Sky Mansions. Let's get on with this. So I will be starting with some fundamentals. So we start by looking at what has happened already as of this morning. So as you can see, this is the FinViz website. And from what we can notice, Trying to increase brightness here. So from what you can notice, the biggest mover as of this morning has been the Australian dollar, which is up 0.33% against the USD. The New Zealand dollar closed by up 0.21% against the USD, whereas the Japanese yen has been the biggest loser, down 0.35% against the dollar, and this makes it the weakest currency for the day. So as for the week, that is since the week started, the Japanese yen is still the weakest currency, down 1.23%, whereas the New Zealand dollar is still the strongest currency, up 0.42%. So you know what to do with this information. Mainly, if you are looking to trade a strong currency, you want to pair it with a weak currency. And if you want to trade a strong, a weak currency, then you want to pair it with a strong currency. So far, New Zealand dollar and Japanese yen tend to be taking the extremes. So on the other hand, if you look at the commodities, trying to switch to commodities. So commodities futures have been making big moves as of this morning. And the biggest gainers since morning include cocoa, which is up 6.93%. Platinum is up 3.71%, and crude oil, WTI, this is US oil, 3.45%, Brent oil 3.37%, palladium 3.21%, heating oil 3.06%, coffee 2.51%, gasoline 2.29%, and silver 2.19%. Bitcoin is also up 1.66%, copper 1.65%, and gold 1.55%. So you can see a trend of the precious metals having some of the biggest gains, and also for agriculture, you can see cocoa and coffee being on the rise, whereas for digital assets, Bitcoin is also performing really well as of this morning. And of course, energy sector, here we see both US and UK oil mainly making some big moves as of this morning. However, if you look at the entire week, that is since the week started, not so many of the mentioned assets are still in the top performers, except I would say coffee, cocoa, and crude oil. So clearly, it's a very bullish week for crude oil. Bitcoin is up a slight 1.19% on the week. So most of these other popular commodities that we trade are still in the negative. Given that early in the week we saw a big crash in gold, and it's still down 4.1% on the week. Silver is still down 8.62% on the week. So what we are seeing today is an attempt to begin a recovery journey. So we'll be diving deeper on that, and now we can check out. Sorry, I wasn't sharing this. So this is the one I was focusing on. So it's the Finviz website. You click on futures, and you'll be able to see the performance of different futures contracts. And here, when you select week, then you're able to see the top and bottom performance for the week. So on the economic calendar side, it's a bit thin today, especially for a Thursday. So we don't expect a lot. Most forecasts will be from 3:30 when we get the core retail sales data, as well as retail sales data from Canada. This is expected to be a big mover for the Canadian dollar. We're expecting retail sales to core retail sales to have increased by 1.3%. That's month over month in the month of September, whereas the prior number was a drop of negative 1.2%. So on the other hand, headline retail sales expected to have increased by 1.0%. This is a big improvement from the prior reading of negative 0.8%. So remember, retail sales tend to be positively correlated with the currency. So a strong retail sales report often comes with a stronger currency. So we could be seeing the Canadian dollar strengthening, especially if the numbers beat the forecast or the expectations here. So we'll be getting existing home sales data from the US economy at 5 p.m. and also consumer confidence data from the Eurozone still at 5 p.m. So later on, we'll be getting two Fed members speaking. FOMC member Bauman, as well as Barr will be speaking around 5:25 p.m. and that is it on the calendar. So fast forward to tomorrow, we'll be looking at national core CPI data from Japan at 2:30 a.m. Then in the morning, we'll be getting the retail sales data from the UK. And then for the rest of the day, we will be getting the S&P Global Flash Manufacturing as well as Services PMIs from various economies, including the Eurozone, the UK, as well as the US. And then we also be getting the main inflation data at 3:30 p.m. That will show us the level of inflation in the US economy ahead of the Fed rate decision, which will be happening on the 29th of October. So other than that, key highlight as we continue, government shutdown becomes second longest in US history. So the government shutdown became the second longest federal funding lapse in US history. So the two longest shutdowns have both occurred with President Donald Trump in office. So Democrats want any short-term funding bill to include an extension of enhanced tax credits under the Affordable Care Act that are set to expire at the end of the year. So a GOP-backed stopgap bill failed to pass in the Senate for a 12th time on Wednesday, that's yesterday, in a mostly party line vote. So the deadlock we have is that on one side, the Republicans control 53 of the seats in Congress, whereas the Democrats control 47 seats. So clearly, the Republicans have a majority and they are able to pass any bills. However, some bills require 60% of the votes. And what this basically means, the Republicans don't have enough members to vote on a budget. So they still need the Democrats to fill in the votes so that they can agree on the budget. But then the Democrats have their own demands. So they also have the things that they want added to the budget. And this has created a deadlock, which has now lasted 22 days, today being the 23rd day. So clearly, it's a tough environment, and eventually we know that they are going to have to agree because the longer it takes, that is the shutdown, the more expensive it becomes for America, the more systems become more concerning. So as a result of this, what we saw at the beginning of the shutdown was more investors flocking into gold and gold pushing into new all-time highs. Before Trump made the infamous tweet where he basically said he's looking to implement over 100% tariffs on China. And then that's when we saw the big crash in gold, big crash in equities. But so far, we have seen most of these assets begin their recovery journey. So from today going forward, we should be focusing on seeing some of these trends continuing. So even if we saw the sharp declines, could be seeing some of these assets recovering, especially gold, silver, as well as US equities. So other than that, trying to see what else is happening in the markets. So as per yesterday, the US economy officially hit 38 trillion in national debt after the fastest accumulation of $1 trillion outside of the pandemic. So the US government's gross national debt surpassed $38 trillion during the federal shutdown, marking a record high. So in the midst of a federal government shutdown, the US government's gross national debt surpassed $38 trillion on Wednesday, a record number that highlights the accelerating accumulation of debt on America's balance sheet. So it's also the fastest accumulation of $1 trillion in debt outside COVID. Remember, the debt was at 7 trillion in August this year. So from August to October, we have an accumulation of 1 extra trillion. So what this basically tells us is that the US government has been increasing money supply. And as a result, we have seen some of this money finding itself in different risky asset classes. This includes stocks, Bitcoin, crypto, gold, silver, and many other assets. So this may explain why we have broken correlations. So despite traditionally some assets having varying correlations, Or we have been seeing this year is most of these assets hitting new all-time highs after new all-time highs, and that has become more of a thing in the markets. So main reason this was happening is because since January, the US economy added over $2 trillion, whereas other economies have also been increasing money supply, and all this money ends up with investors, institutions, banking, all buying these risky assets, trying to squeeze in a profit from their investments. So, with that in mind, we move on to what's happening to gold as of today. So, gold prices rose to around $4,120 per ounce on Thursday, halting a two-day decline as investors weighed trade developments and geopolitical tensions that lifted the metal's safe haven appeal. Reports indicated that the US is considering export restrictions on China involving American made software, though President Donald Trump later confirmed plans to meet Chinese President Xi Jinping. At the same time, Washington announced fresh sanctions on Russia, following reports that the planned Trump Putin summit was postponed after Moscow rejected a Ukraine ceasefire. Expectations that the Federal Reserve will deliver two more rate cuts by the year end also supported the bullion gold. Still, gold remained about 6% below its recent peak amid profit taking after repeated record highs, marking its steepest weekly rise in over 5 years earlier this week. So clearly, the big crash you are seeing in gold is just this small drop here. Most of the year, we have been seeing a very, very strong bullish market. So you can see from January here, with gold trading at 23.38, we managed to hit a peak of over 43.71, and now we are looking at 41.13. So yes, it's a welcome pullback, and as I mentioned last week on Thursday, a dip is a gift. A dip is a gift. So let's continue. What are the other key highlights in the markets today? One, oil extends gains as US targets Russian producers. This has been very true. European stocks poised for flat open. Today they seem to be quite positive. Singapore inflation rate hits 3-month high of 0.7% in September. Dutch consumer confidence improves in October to negative 27, up from negative 32. Dollar edges higher as inflation data eyed. Of course, we'll be expecting inflation reports tomorrow. So South Korea keeps rates steady for third month at 2.50%, and Japanese shares track Wall Street losses. So the Nikkei 25 index dropped 1.35%, closed at 48,642, while the broader topics index lost 0.39%, closed at 3,254 yen on Thursday, with Japanese shares retreating. So those are the key highlights in the markets as of today. Of course, there is more updates, especially if you are to consider a website like oilprice.com. You'd notice that there is mostly a lot of breaking news, especially in oil. So Jera to buy $1.5 billion worth of US shale gas assets. Glut hysteria crashes with missing oil barrels. So over the last week, there has been a lot of speculation that China has been buying oil, which goes unreported. So there was fears that there could be an oil glut, which would mean an oversupply of oil, which was not previously reported. But then now we are seeing missing oil barrels, which balances the equation. But then when you add what's happening with Russia's oil production and distribution facilities, then you know that it's more of a shortage. And as a result, we are seeing the prices pumping higher. So trying to see if I missed something. Just a sec. Yeah. So the top highlights today are on Yahoo Finance. Dow, SP 500, Nasdaq futures mixed as Tesla falls after earnings. So yes, last night you had Tesla earnings. They basically were mixed, and as a result, we saw the Tesla stock dropping. So you can see the Tesla stock reaction here. So while it closed the day down 0.82%, in aftermarket trading, it dropped a further 3.8%. So the opening price is expected to be $425, which is way different from the closing price yesterday, which was 438, showing signs of weakness in the stock. So when you look at the earnings and the trend in the earnings, I'm just gonna give you a quick highlight here. You'd notice that yes, revenue from the prior quarter was 19.34 billion, and now it moved to 22.50 billion. So clearly a big improvement, growth over $2 billion. So net income was $409 million, and now we are seeing $1.17 billion. So clearly, better performance from both sides. But then when investors are analyzing the earnings of a company, we just don't look at the prior quarter. We look at what the market had priced in or the expectations. So when you compare Tesla's performance with expectations, it missed yesterday, leading to a mixed performance. So if you look at the report that they released yesterday, you notice that revenue was down 11.78% in year-over-year change. Operating expense was up, but then net income was down, net profit margin down, earnings per share down, and EBITDA also down. So this explains the big sell-off that we saw in the market after market close. So other than that, trying to see what else. US sanctions on Russia oil giants send shockwaves across China. So US sanctions on Russia's energy giants are sending shockwaves deep into the heart of China's oil industry, where both state and private refiners face heightened pressure to keep up supplies while steering clear of penalties. So as much as 20% of China's crude imports, that is about 2 million barrels a day, in the first 9 months of this year come from Russia, making it one of the country's leading sources of oil for processing into products such as diesel, gasoline, and plastics. So Trump and his administration's blacklisting of Rosneft and Lukoil is the latest in a series of measures rolled out by the US, the EU, and the UK targeting buyers of Russian crude, and the contribution they make to Moscow's coffers and its war efforts in Ukraine. Transactions involving two firms need to be wound down by November 21, according to the US government. So the risk for China, as well as India, Russia's biggest customers, lies in their dealings with sanctioned entities, which can leave companies exposed to crippling secondary penalties. So these include being cut off from Western banking systems and access to dollars, or frozen out by the Western producers, traders, shippers, and insurance that form the backbone of global commodities markets. So of particular concern is the role Western firms play as investors and operators across major oil-producing regions, such as the Middle East and Africa, traders say. Chinese and Indian companies that continue working with sanctioned firms risk being sidelined or cut off from large numbers of projects. So if they choose to comply with the sanctions, they will lose access to deeply discounted supplies of oil that have helped keep energy costs low and industry and for industry and consumers. So additionally, buyers outside China and India are grappling with the impact of Lukoil, which is involved in Iraq's Basra project and the Caspian Pipeline Consortium in Central Asia. So the UK moves last week to blacklist Rosneft and Lukoil, as well as China's Shutdown petrochemical company, for its Russian imports and already put traders on edge. Western companies have since become wary of supplying the privately owned refiner. Other recent US sanctions have targeted major Chinese ports, including Rizal and Dongjiakou, key conduits for both Russian and Iranian oil. So yes, this is accelerating. It's unclear, however, if this pipeline flows about 800,000 barrels a day will be affected by the sanctions due to the government-to-government nature of the project. CNPC did immediately reply to an email seeking comment. Phone calls to the company also went unanswered. So together, the two firms supplied about 1/4 of Russia's oil exports to China last year, according to data analytics firm Kepler. So clearly, this is causing a bigger impact in the market. So we'll be focusing on it later in the presentation today. So a flood of that quarter earnings arrived after the closing bell. Tesla shares fell over 3.5% after the EV maker posted mixed that quarter results, kicking off the Magnificent Seven earnings cycle. IBM stock dropped about 6.5% as stronger than expected profits were offset by inline software revenue and nevertheless disappointed investors. Trade developments continue to move markets too. President Trump said on Wednesday that a long anticipated meeting with Chinese President Xi Jinping is scheduled, offering a bit of reassurance to markets. Unsettled by rising US China tensions, stocks came under pressure earlier in the day after Treasury Secretary Scott Bessent suggested the White House could expand export restrictions on China bound software products by November 1. So just a sec. So investors are eyeing the release of the inflation data on Friday, hoping for clues about the Fed's next moves. Markets broadly expect another quarter point rate cut in next week's meeting. So meaning that markets are pricing in a full 25 basis points rate cut on the 29th of October. So finally, in corporate earnings, T-Mobile, Blackstone are expected to report before the market open today, while Intel will take the center stage after the bell. Other companies reporting will include Procter & Gamble, which could also be a big market mover on Friday. So that's the fundamental analysis side. And now I believe you can jump straight into some technical analysis and try to understand what current chart patterns we have and how we can use them in trading. So this is the MetaTrader 5 trading application that we use at FXPesa for trading. That is for desktop applications. So if you like using a smartphone in trading, then check out the Equity Trader by FXPesa. It's an app that is available on App Store as well as Google's Play Store. And you can use that to access various global markets. And this ranges from Forex to stocks to indices to commodities and many other assets. So let's begin by looking at the dollar. So clearly, you can see that the dollar index seems to be pretty strong today. This is how the dollar index has performed since the market opened. So the price action started here and we went high. We've had a couple of pullbacks, one on the Tokyo session, and now as we approach the London session, it seems like the dollar is picking up where it left in the Sydney session. Remember, the Sydney session is the first hours from midnight before the Japanese guys open up. So clearly, this was pretty bullish. So even if we had some pullbacks, they didn't raise the gains we had in the Sydney session. So now looking at major currencies and how they have been behaving, you'll notice that the dollar has been mostly on a recovery path. And remember, someone mentioned we check out USD card. So clearly, the dollar has been on a bullish momentum. So if you count the last 5 weeks, this is the dollar gaining against the Canadian dollar, which is way off the usual patterns. So notice how we had a very strong bearish momentum for the better part of the year, meaning that the dollar was losing to the Canadian dollar. Then in June, July, August, September, here we had a bit of a reversal. And now in the month of October, we are seeing more like an exhaustion in bullish momentum. So since we got to this area here, you'll notice that the price first broke this area, but then in other attempts, it was never able to break above it. And now, if you look at the support we had then, it was around here. So the market was pulling back to this area and finding support. Eventually broke the support, retested and continued lower, which implies that the dollar is now losing ground to the Canadian dollar. So given the correlations we tend to observe between the Canadian dollar and oil prices, so if oil prices are on the rise, the Canadian dollar could also be on the rise or recovery path against the USD. So in this case, even if we are seeing the dollar attempting to make a push here, The idea is that as soon as we get closer to this particular trend line, there's a good chance that we see a big drop happening from one of these areas. So it's no guarantee, but it's a kind of a patient move where you wait and see. And if you happen to see something similar to what happened here, market goes up, forms some long tails, and then you start seeing strong bearish candlesticks, then you know that that's the confirmation to go short. So that's the idea around looking for opportunities in the USD card currency pair. So now let's look at other pairs. The most traded currency pair is the Euro USD. Clearly, the Euro had a case to make last week, very strong bullish momentum. But this week, it has started on a negative note, basically giving back some of the gains to the USD. So far, from Monday, Tuesday, Wednesday, it has been more of a bearish move. Yesterday, there was an attempt to move up, which failed. And today, we could be seeing yet another attempt. So from looking at this chart from the 4-hour time frame or even the daily time frame, you would notice that this was a market that was generally bullish from the month of January here all the way to the month of September. So since the high that we got on September, which almost looks like a double top compared to the last high that we saw in the month of July, then you can see that the market is really attempting to push further downwards. So you look at last week's bullish momentum and this week's bearish momentum, then you can see that the euro is giving back some of the gains it had made earlier in the year, which likely means that we are headed all the way back down for key level support. But before we start looking for targets around this bottom here, there's always an in-between move, and this could be somewhere around yesterday's low. So yesterday's low could be a nice target here, where the market is now pushing lower, and we could be seeing the market retesting 1.15766 price level. So the same case applies for the pound. It seems to be quite bearish, especially after the CPI report showed a slight miss in expectations. That was reported yesterday. So inflation is not rising as anticipated, which is a major relief that the Bank of England could resume with the rate cuts. So with that expectation, what we saw was a big drop in the pound against the USD yesterday, which was later reversed during the New York session. And now you can see that during the Sydney session, there was some further drop, but then the structure of the upper trend line remains the same. So this means that every time the market has gotten to this particular trend line, all we have seen is more bearish momentum, and right now is not any different, which implies that this could be our chart of the day, where we look for more short selling positions with targets around yesterday's low. So it's a very interesting pair to trade, mainly because that every time we have seen the market get to this trend line, a very sharp drop. So here we have seen the market really struggle to break, but now we are seeing more evidence of short sellers entering the short side of the pound USD pair. So you look at dollar Swiss franc. Yes, the dollar has been pretty strong, but then there's a key level to test here. And I would say that this point here, which was a previous high, is where the market is looking to approach before making a further drop. So yes, observe what happens when the market gets to that level. Hasn't gotten there yet. So the kind of approach we do here is wait and see. So you look at dollar yen, we had some form of triangular formation as per yesterday. We had a breakout, retest, and then continuation. And since then, the market has taken a path with more bullishness. So remember, we had this sequence that lasted about 2-3 weeks max, where the market was mainly moving downwards. So after breaking towards the upper side, normally as a book pattern, we expect the price to go all the way up and retest the top of the pattern. So the top of the pattern is at 153.215, and that's for USD JPY. So for AUD-USD, it's quite a chaotic market, especially if you check from the lens of the 4-hour time frame. But if you go to a smaller time frame, like the 1 hour time frame, then you realize it's nothing like chaos. It's more like an ordered uh, consolidation. So nothing much is happening here. I would say that this is a market that is basically just moving sideways. So overall, for the last couple of days, the momentum is sideways. So unless we have a break, we don't have a long-term potential opportunity. But as for today, given the strength and momentum we are seeing in gold, we could be seeing that reflected in our USD. Australian dollar tends to be positive correlated with gold, but then we just hit yesterday's high. So the real question is, are we going to have the same reaction that we got here when in the morning the market was retesting yesterday's low? So it just retested yesterday's low. Now you have retested yesterday's high. Are we going to remain within that range, or are we going to have a break? So far we don't know, but it's a market where you wait for the eventual break. So as for gold, yes, we are seeing very strong momentum, especially since yesterday in the afternoon. So today it has really struggled, but now it's trading higher than yesterday's price, which implies that buyers are slowly coming back into gold. So if you look at the four candlesticks and you look at the two green candlesticks here, there were a boost of confidence that buyers are back in. So a slight pullback and then continuation here in what looks like a harami kind of candlestick. And now it seems like the pump is setting up. So after the small pullback here, we have seen the market attempt to push high again. And given that the shutdown is still there, the tariffs are still being negotiated, we could be seeing gold make a recovery, and the recovery is expected to hit the neckline. So we had a double top formation here, which looks like an M formation on H1. And since we broke that level and pushed even further lower yesterday, the market never really tested this neckline here, and that's for 41.85. So good chance that we see the market going for 41.85 before the next making the next move. So yes, it's a slow, I would say difficult to trade range, but if you're a patient trader, good chance we'll be getting back to 41.85. So as for silver, we're also seeing a very strong bounce. So after we got to a new all-time high of $54.46 per ounce, we have been seeing more of a consolidation in silver. And from what I'm seeing here, if this market was following this path, and on the lower side, let's say it was following this path, I would say we have had a breakout retest and a continuation. And I would argue for the case of the market retesting the top of the pattern, which is 50.36 ounces per silver. So good chance that we see this move being extended this way, though as you can see, the candlesticks are getting smaller and smaller. So as for Brent oil, it's the biggest mover today in the market. Uh, in fact, in the fundamental analysis today, I don't think there's anything I've covered more than silver. So since yesterday's market open, Brent oil is up 6% and counting. So 6% gain in Brent oil in what period of 2 days, and today is not even complete. This is amazing. It basically tells us a story that oil is up $3.7 within a span of 2 days. So if you're looking for a potential resistance area, I would go for the prior high. So after we started this big sell-off, the market now could be headed for $66.35 per barrel of oil. So good chance that we see an extension of this strong bullish momentum to 66.35. So this may as well be the chart of the day, and given the strong momentum we are seeing since the market opened, there was a gap, we crossed the gap, and then the market started pumping higher, and that has been the story of the day. So on US equity side, I still believe that there is still some concerns from Trump's tariffs, his ways of negotiating, and how he keeps leading to things like this. This was not pretty, and it happened 2 weeks ago. Then last week, another sharp fall. Then the market attempts to recover, forms another double top, big sell-off. It's not very pretty picture to see your stocks having that kind of volatility. So what this basically means is that the markets are now adjusting to the Trump politics, and whenever he says something, they know if there's a pullback, the market will eventually recover. So the Trump always chickens out trade is what is mainly driving US equities. And here, after the pullback, we are seeing some form of consolidation. So let's be patient and watch with the key buyers that there's a good chance that we'll see some further drop, given that Trump may make yet another update today. Tesla, among the Magnificent Seven, also missed earnings or had mixed earnings. So good chance that we see some further drop later. So that's for US 30. If you look at US US Tech 100 or the Nasdaq, you'll pretty much see the same thing. Here I'm talking about a market that was on a very strong bullish momentum, traded sideways for a day, then the following day a very sharp drop, and that following day was yesterday. So today, since the market opened, all we are seeing is a market that is really, really slow. So since the market opened, we haven't seen the market break outside there, and this is the 15 minutes chart. So clearly nothing has been happening here. So it means that markets are muted or trading sideways, and eventually we'll have some form of breakout. So we continue tracking that. So the same case applies to SP 500, more of sideways momentum happening in the markets today. So I wouldn't say this is the right kind of price action to be looking opportunities for opportunities for. It's similar to what we saw yesterday and the prior day. So yesterday and the prior day, the SP 500 was just trading here sideways, and then a real opportunity appeared, and the market started going down. So if you think along the same lines, then the current sideways momentum would make you more objective and wait for the eventual breakout, trade the impulse, and stay out of the consolidation zones. So Bitcoin is attempting to make a very good comeback as of today. So since the market opened, it was around 107. So we got to around $10,000 per Bitcoin. We got some kind of pullback. But then the idea is that we are finding good support levels around these areas. So this could set up for another bull run from these levels. So with that in mind, if you look at European equities, you look at UK 100, we were in this kind of channel where the market was really moving down. So we broke above it and we had a very strong rally here. This was as per yesterday. We haven't yet completed the journey. We are going to the top of the pattern. So 95.73 is a nice target as the market continue pushing higher. So for the Nikkei 225 index, we've had a pretty good strong bullish momentum. But then we can see that the market almost got oversold. So while we know that the trend is a very strong bullish momentum, the idea is that whenever the market overextends towards the upside, it almost like always it tends to pull back again. So in this case, we are seeing the market getting to the upper trend line and now beginning another journey towards the lower trend line. So we could be seeing some glaring fall as the market continues pushing lower, looking for buy zones or areas where buyers are ready to come in and drive the prices higher again. So if you look at European equities, we are also seeing a similar pattern with US equities, only with more or increased volatility because we're in their session. So we're in the London session, not the New York. So we tend to see more volatility from US equities. Sorry, European equities. So for the DAX, you can see it was majorly trading sideways. We get the London session, attempts to move up, but hits a pretty critical region here. This was a key level support and resistance. And immediately after hitting that, sellers come in and drive prices all the way down, which implies that we could be headed to yesterday's low. And the yesterday's low was already all the way down at 23,943. So this is now our new target for the DAX 40. So you look at EU 50, clearly after a very strong bullish momentum at the beginning of the day, we tested a key level here. And then the market decided to change direction, and now we are moving lower. So clearly, we could be seeing some further downside momentum to around 56.32 and potentially extending all the way down to yesterday's low. So France stock market index also had some strong bullish momentum. Couldn't beat into a new all-time high. So now, given that this is more or less like a range for the last 3 days, then it's safe to assume that we are headed back here, and that's yesterday's low. So for the Swiss 20 stock market index, we have entered a range. So in a range market, you can either decide to trade inside or outside the range. Personally, I prefer outside. So this basically means that the market is just moving sideways with a slight incline, which is towards the bear side. So here we are right at the center of the channel. So no matter what you do, it's very difficult to find opportunities in a market that looks like this. Maybe trade on the edges along the trend lines. So Norway stock market index with a big gap up and now moving higher. So here we are looking at potential path towards recovery. So we spent a good number of weeks trading in this range. So eventually we had a breakout last week that sent these stocks all the way down, but now we are seeing a very strong recovery. So good chance that we see the market pushing even higher. So that's it for the day. I will be checking on the comment section to see if there's any questions. Respond to the questions as we approach the end. So on the question of profit taking, I believe yes, that has been a pretty good case. I can see we have 420 live listeners. Congratulations to you on hitting the magic number. So for those who don't know about the Bullish Banter podcast, it's a podcast where we get to talk about the markets. We get to dive deeper into strategies, discipline, and everything surrounding trading. So, in our latest episode, we hosted a Congolese trader called Tim Bear, where we got to discuss about bots. So, if you have questions about trading using bots, how to do it, the do's and the don'ts, then this is the episode you need to check out, among other episodes that you've been covering over the time. Thank you for your support and your responses. Make sure to check it out. So, also, if you're here for the first time, you should know that these live streams are recorded. So, you can see the past live streams that we've been doing. So, just in case for any day you miss a recording, just go to YouTube, search FX Pesa, and you'll see the past live streams. Remember, they happen every day, Monday to Friday at exactly 11 a.m. Unless that day is a holiday, and maybe we need to take a small break. So, that is it. Trying to see if there's a question I may have missed. So, good morning. What happened nowadays on currencies? Chart is not clear. Main reason you see some kind of discrepancy on market behavior today is because of Trump. Trump has completely changed how people are approaching the markets today. Not just us, but also bigger institutions and banks. We are all affected by how Trump is managing the US economy. So good differentiation here. Fundamentals focus on market conditions and market ideas. Technicals give us the entries, and also Trump tweets on through social, especially the tariff war has been market movers. Thank you. That is very clear. So we already covered USD JPY. You can see Omalo JT. Thank you for joining. Correlation between the BTC and gold. I don't think it's that strong. Correlation we have seen that is currently very strong is between the Nasdaq index and gold, because they are both impacted by risk appetite, as well as I would say risk appetite and global liquidity. But on the long term, the Nasdaq is nowhere close to the returns that gold has been doing. Sorry, the returns that Bitcoin has been doing. What is the minimum balance required to trade BTC? I would have to check on that. But usually not much, because leverage is like 1:100 for smaller trade. So if you're doing smaller positions, you have to do your calculations based on 1:100 rate. So that's it for the day. Thank you very much, everyone. Remember, like, subscribe, share the live session with other traders. If you're watching this on X, like, subscribe. If you don't have a trading account, check the links in the description below. Register for that trading account. And if you haven't yet gone into a live trading account, you should know we have a current offer ongoing, where if you deposit for the first time, you will be getting 100% deposit bonus on your account. And this is capped at $5,000, meaning that even if you deposit $5,000, you'll get a full bonus of $5,000. This is an opportunity of a lifetime for you guys. Make sure to take advantage of it. So that is it. Enjoy the rest of your day.